Okay, picture this. It's the year 2025, and the silver market isn't just a market, it's become this high-stakes drama. We're about to dissect a spectacular rise and an even more spectacular fall. And trust me, this story holds a critical lesson for every single investor out there. Let's get right into it. So to really get why the crash was so brutal, you first have to understand the rally. I mean, look at this number. By late December 2025, silver had posted a mind-blowing 170% return for the year. It wasn't just doing well, it was one of the absolute best-performing assets on the entire planet. And that right there is the big question, isn't it? How does an asset that's making people a fortune suddenly become the single most dangerous trade in the market? Well, that's the mystery we're going to unravel today. To get our answer, we have to go back to the beginning. We have to look at the rally itself, this relentless year-long climb that sent silver to heights nobody had seen in decades. You know, the momentum just kept building and building. It starts the year under 30 bucks, and then it just methodically chews through every resistance level. But just look at what happens in December. The price goes completely vertical. It explodes from $60 to nearly $80 in just a couple of weeks. That, my friends, is what we call a parabolic move. And here's the thing. This rally wasn't just hot air and speculation. No, it was fueled by a perfect storm of really powerful fundamentals. I mean, you've got a massive supply shortage for the 5th year running. At the same time, demand from high-tech sectors like AI, solar, and EVs is just exploding. Throw in a weaker dollar and a whole lot of global uncertainty, and you literally had all the ingredients for a historic surge. But, you know, as the price went parabolic, the professionals, they started seeing red flags. That euphoria of the unstoppable rally was beginning to look a lot more like a dangerously overheated market that was about to pop. They were seeing the classic signs of something called a blow-off top. Now, this is a pattern you absolutely have to understand. It's that final, insane surge in price, driven by pure, wild speculation. It feels like the strongest part of the whole trend, but in reality, it's the most treacherous, because what comes next is almost always a sudden, violent collapse. And the experts were absolutely sounding the alarm. You had analysts from major firms and strategists like Michael Boutrous all looking at the charts and basically saying the same thing. Hey, this market is extremely overbought. This whole rally is vulnerable. And this chart just illustrates the huge divide perfectly. On one side, you have the retail traders. More than half of them were convinced silver was about to scream past $100 an ounce. But on the other side, you've got the major banks with their much more sober forecast, calling for an average price around 60 bucks for the next year. This giant gap between Main Street euphoria and Wall Street caution, that is a massive red flag. And if you wanted a hard number, a quantifiable warning sign, here it is, 84. This was the reading on the Relative Strength Index, or the RSI. Now, to put that into perspective for you, anything above 70 is already considered overbought. Hitting 84, that's way into extreme territory. It's a signal that the buying frenzy had reached a completely unsustainable fever pitch. And that brings us to the climax of our story. On December 29th, that unstoppable rally finally and violently hit a brick wall. The headlines that day really told the story with brutal efficiency. After hitting brand new record highs, the market didn't just pull back, it got smashed. The speed and the shock of it all just caught all those euphoric buyers completely off guard. And the damage was severe. In one single day of trading, silver plunged 15% as a tidal wave of profit-taking just slammed the market. Think about that. The gains that took weeks to build up were wiped out in just a matter of hours. So, was this crash a complete surprise? Well, not if you knew where to look. Turns out there was one really powerful tool that showed exactly what the most informed players were doing right as the price was peaking. It's called the Commitment of Traders Report, or the COT report for short. The best way to think about it is like an X-ray of the market. Every single week, it shows you the real positions held by 3 different groups. It basically gives us a peek behind the curtain. Now, the crucial part here is understanding the 2 main opposing forces. So on one side, you have the commercials. These are the industry insiders, often called the smart money. They use the market to hedge their risk, so they sell when prices get really high. On the other side, you've got the speculators. These are the funds and retail traders who chase the trend, buying high in a state of total euphoria. And in the weeks leading up to the crash, the COT report was showing a maximum divergence. The smart money, commercials, had built up one of their largest bearish positions ever, selling heavily into that rally. And at the exact same time, the speculators were more bullish than they had ever been, buying with both hands. This extreme disagreement is a classic textbook signal that a major reversal is right around the corner. So, what's the big takeaway from all this? The story of the 2025 silver crash isn't just some interesting history lesson. No, it's an actionable survival guide for how to navigate the final, most dangerous phase of any parabolic rally. Okay, let's break this down into a clear, simple framework. First, you have to identify the extremes on the chart. That means vertical price action and RSI readings way up over 80. Second, you got to heed the sentiment gap. When retail is wildly euphoric and the pros are cautious, that's a big warning. Third, follow the smart money. Use that COT report. When they are positioned heavily against the crowd, you need to pay attention. And finally, step 4, respect the reversal. These kinds of moves don't end gently, they end with a crash. Because here's the bottom line. History tells us that another rally just like this isn't a matter of if, it's a matter of when. The signs of the endgame will absolutely appear again. The only real question is, now that you've seen the anatomy of this blow-off top, will you be ready to spot them next time?